Hello guys, welcome to our channel. Today I'll be introducing you to a very simple but working strategy in the forex market. So stick and stay as I take you through it. The strategy is based on 5 simple steps. Step 1 is know your direction. Step 2, finding a zone. Step 3, getting confluence. The 4th step is finding a confirmation. And the last part is knowing when to exit. So let's just take them one after the other. The market has two main directions. We have the uptrend and then the downtrend. In an uptrend, the market creates a series of higher highs and higher lows, higher highs, higher low, higher high, higher low, higher high, and higher low. It can continue up. Now, in a downtrend, the market creates a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So you guys have to study the movement of the market. Anytime a higher high is created, it comes down to create what we call a higher low. Anytime a higher high is created, it comes down to create a higher low. Now, this means that whenever you go into the market and it has already created a higher high, which is here, it means that it is time for you to execute a sell, because what? The market always comes down after it creates a higher high. So whenever you see a higher high, do never go and buy the market. Never buy when the market has already created a higher high. Always look for sell opportunities. Now, after the market goes down to create a higher low, that is when it is now time to execute a buy. That is how you find the direction of the market. So anytime you know the next move of the market, right now the market has created a higher low. What is the next move? Up. It has to go up to create what? A higher high. Exactly. So anytime there is a higher low, you look for buy. Alternatively, on the downside, whenever market creates a lower low, it goes back up. Creates a lower low, it goes back up. And whenever it creates a lower high, it goes down. Lower high, it goes down. This is how you'll be able to identify the movement of the market. So now, let's assume that market has created a lower low. What is the next move? Up. So if we know the market will go up, what do? We need to execute a buy position right there. So when market has already created a lower low, never go and sell. You get it? Never go and sell. When market has created a lower low, that is when you should be looking to buy. And after it goes up to create a lower high, then it is a good time to sell. So that is how you get the direction of the market. This one lets you know the next move. Okay, what the market is going to do next. After a lower high like this, you know we are going down. And after a lower low like this, you know we are going up. That's it. After you determine the direction you want to go, the next thing is to identify your zone. Now, we have two main zones in the market. We have demand zone and then the supply zone. A demand zone is an area where we have a lot of buy orders as compared to sell orders. So here we are saying the volume of buy is more than the volume of sell. That gives us a demand zone. And that is what we have here. Demand greater than supply. And whenever demand is greater than supply, we expect price to go up. So for you to be able to identify a demand zone, then you need to see an area where market breaks a new high. Okay, mostly you find it when market is going up like this. That is how you identify a demand zone. Now, a supply zone is an area where there are more sell orders compared to buy orders, and that is what I have in my second scenario right here. Now, here, whenever market comes into this zone, the expectation is that the price is going to drop because in simple or in basic economics, we know that whenever supply is high as compared to demand, the price will drop. So these are the demand and the supply zones that we have. Number one is demand. Number two is supply. All right. Notice that when price comes into the demand zone, the expectation is that it's going to go back up. And when price goes all the way into the supply zone, the expectation is that it will continue to drop. Now, let's go to the next step. In the market, confluence is where two things agree, basically where two things merge together. So there are so many confluences that you can use in the market. I've just listed 4 of them here: Fibonacci levels, psychological figures, trend line, divergence. People can use a whole lot of other stuff for getting confluence. So basically what we want to do is that when we have our zones, we have here our demand zone, we have here on the right side our supply zone. Now, what gives us the confidence to execute? That is when the topic of confluence comes in. So let's take the fib. We can take our fib, measure from this point to this point right here, and we can clearly see that the 786 fib level is also in line with the demand zone. Again, we can look for a psychological figure, which could be the 50s and the 100s in terms of the Forex space, like whole numbers, okay? Whole numbers. If you have a whole number here, that is a good psychological figure. Those are areas of interest for the big investors. That is where a lot of decisions are made. Now we can also use trend line. If you have trend line all the way, that is also one. And if they converge here, if all these things converge here, then it's telling you that around this level is a strong area to execute the trade. It's the same thing for the downside. I don't think we need to even waste our time there. Let's just go to the next one. For the divergence, you need to combine it with an indicator. It could be RSI, it could be stochastic, a whole lot. You guys, if you do not understand up to this point, please don't worry. This channel has been created for you. We are going to do a lot of education on all this. Today, we are just giving you a summary of the strategy. In our subsequent videos, we are going to discuss each and every topic individually. All right? We will take you through Fibonacci, psychological. In fact, all of them, we will tackle them one after the other. For now, we are combining everything together for you to know what the strategy is about. Now, let's go to the next. Now that we have been able to identify our direction, we know our zone, we have 2 or more confluences. The next step is confirmation. And I have about 3 confirmations that we will look at. Now, it tells you that after you've been able to go through all the 3 steps, you still need to confirm whether you have to execute a trade or not. So the first confirmation that we have is looking for a pin bar. The next one is double top, double bottom. And the third one is a break of structure. Now, quickly, I would like to show you how a pin bar looks like. Let's just go to Google. Okay, sometimes you just have to search things online. This is what a pin bar looks like. Here, this one. I'm talking about this one. Now, for you to sell, you need to look for a candle which looks like this, a wick at the top with body at the bottom. This is for sell. Okay, this is pin bar for sell. Now, this one, okay, wick at the bottom with body at the top is for buy. Okay, this is pin bar for a buy. So when we go back to our chart, let's clear these things. When the market comes into our zone, assuming we have all the confluences and everything, and it's telling us to execute, we just look for a green candle right here. Let's change the color to green. And make sure that that green candle has what? A wick at the bottom. Alternatively, for a sell, we look for a red candle. Let's change the color to red. and we make sure that there's wick. Okay, it has wick. Let me change the color to red. We make sure it has wick at the top. This is our confirmation candle to execute. Normally, for the pin bar, I look for pin bar when I am trading a continuation pattern, like when the market is trending and I want to just continue with that trend. Our next confirmation pattern is a double top or double bottom. Now, for the double top, I normally look at it when taking reversal trades. This is what I mean by it. Now, when market is going up this way, okay, ideally we should be taking buy trades, okay, but because we know that after it creates a higher high, the next move is for it to go down, then it is also ideal for us to take the reversal. So normally I look for a double top right here. Now this is what a double top looks like. We have a level. Let's say we have a supply zone here. Market comes to hit the zone, bounces off, comes to the level again. Okay, so this is the first top, this is the second top. But like I said, I normally use double top, double bottom in addition with the pin bar. So for the second touch, I have to wait for a pin bar to form, because at the end of the day, I don't know whether this second touch could actually go up and create a higher high. So right when the market is here, I wait for this to form. A red candle with a wick at the top. And this is my double top. This is my pin bar. The next thing to do is just execute the trade. All right. You can also use the double top, double bottom when taking, continuation trades like this one. You can find a double bottom here and take a buy. Okay. Now let's look at how a double bottom looks like. Market comes into our zone, goes down, hits a level, bounces off, comes to the level again. Then here we are going to look for, because we are buying, we will look for a bullish pin bar, something like this. Something like this, with wick at the bottom. Guys, the wick is so important. If you do not have the wick, it doesn't qualify as a pin bar, okay? And you do not need to take the trade. You need to see the wick. It is even better when the wick is longer. It is better when the wick is longer. So these are the double tops and double bottom. The next thing is break of structure. Let's assume that you do not get, if you have a double top, double bottom, but you do not get a pin bar formation, then you need to mark this level right here. Okay, when the market goes below that level and closes below it, that is what we call a break of structure. Right here is your execution. When the candle closes right here, you need to execute. The same thing when it breaks this level, okay, when market goes and break this level, the candle, the very candle that breaks, that is your execution candle. Just go ahead and boom, just take the trade. Now let's move to the next topic. So after you have successfully followed all the 4 steps, the last step is our exit. And for exit, we have 2 of them: the stop loss and then your take profit. Where to place your stop loss and where to place your take profit. Now, this is a typical pattern that we are going to have, assuming we have all the confluences and everything. We have the confirmation pattern here, which is a pin bar. Now, we are going to use this tool. This formation is for a buy. Exactly here is where we are going to buy. Our stop loss is going below this. All right, that is how much we are willing to risk. Stop loss is basically how much we are willing to risk. And guys, again, please, if you do not understand any of the tools that we are using here, or if you don't even understand some of the topics that we've discussed, don't worry. Just make sure you subscribe to this channel. Okay, subscribe to this channel. Click on post notification bell so that you'll be notified anytime we post a new video. Because what we are going to do is that we are going to take each of these and delve into it deeper. So actually, you just have to stay tuned. Make sure you subscribe, and also please guys like the video so that the YouTube algorithm can recommend our videos, and that is how we can create a community of like-minded traders. Okay, let's help ourselves. Help me as I help you. Like the video right now before I even proceed. Okay, thank you for liking. So with this one, our stop loss is going about 10 pips below the wick. Okay, below the wick, just some few pips, 10 pips, 15 pips maximum. And then our take profits, we can actually use Fibonacci to take our profit. That is when we have our fib run from this point to this point, then we take our profit on these levels, either the 272 or the 618 level. All right, so this time 618. Then anytime you're taking a trade, you have to pay attention to this number, which is the risk reward. This time we have 1:2.5. That is, for every $1 that we are risking, we are willing to make $2.5. In fact, we are going to go into this topic deeply. That is how you become a profitable trader. You can have all the strategies, but if your exit is not correct, trust me, you are not going to survive in this market. So this is a good risk reward ratio, 1:2.5, very good. And you just take the trade and let it run. All right, you know how much you are risking, you know how much you are going to make. So you just take the trade. The next thing is to just let it run. Let the market decide, because at the end of the day, you don't control the market. You can't do anything about this market. It is controlled by the big players. Okay, deep pockets. Now let's do for the downside. I don't think there is even a need. We just have to go to the chart and find examples how we can combine everything together on the chart. So let's just go to the chart straightforward. Before we even start with our analysis, please guys note that everything that we are going to do will be based on the 1 hour and the 15 minutes time frame. Mostly we are going to determine our direction on the 1 hour, and our execution will be on the 15 minutes. And what I mean by that is the confirmation, okay, the confirmation will be on the 15 minutes mostly, and the direction will be on the 1 hour. All right, so let's proceed. Here on gold, we have market going down. Let me change the color to red. Then it made a pullback, created a lower low. You guys at this point, you know what is likely to happen next, right? We have a lower low. What do we do here? Tell me. Exactly, we are going to execute a buy right here. Okay, we are going to execute a buy right here, because what market creates lower low from the direction that we did, it needs to go up and create a lower high. So it only makes sense for you to execute a buy right here. And when market comes up to create a lower high, what next? We need to execute a sell. And that is exactly what happened. When it went all the way up, we executed a sell and it went down. But let's just get to know how it all happened. Okay, how it all happened. At this point, we know that we are looking for buy here and we are looking for sell. But notice that this is actually our zone. Okay, when we discuss the demand and the supply zone, this will be considered as our supply zone. Okay, so we have a supply zone here. So in this supply, we draw our fib from here to this level, and yes, we have a confluence right here. Fib is in the zone, and again we have a psychological figure which is 25. That is the 500. Yes, so we have this psychological figure. We have fib. So in and around this level, we expect the market to fall. Now, the next thing to do after doing all this is to look for your confirmation. After the confirmation is the exit. All right. So on 15 minutes, that is where we will be looking for our confirmation. Because it is a continuation, we can look for a pin bar But here, market came and the first candle that formed was a doji, no pin bar. The second candle was a bullish candle, we don't need it. Now, the next candle was very bearish, but it's not pin bar. If you check what a pin bar looks like, that is not. But I think on this trade, what we had was a break of structure. It tried to form a double top by going up here, coming down, and then the next up. Okay, it should have gone a little bit higher, but it doesn't really matter. I've told you that when I'm trading a double top, I also look for what? A pin bar. Okay, so for the second move, I look for a pin bar here, and it didn't happen. So on this trade, the only confirmation pattern that we got is break of structure, which is the break of this structure right here. Okay, so this candle right here is our execution candle, and this is how the trade would look like. We execute here, our stop loss a little above the execution candle, about 10 to 15 pips. Then our take profit, we can use the fib levels. So let's draw our fib again, measure from this point to this point, and then the fib level 618 can be our take profit level. You can also extend all the way to this. Okay, so what you can actually do is when it gets to the 272, you can take partial profit, then you book all profit when it gets to the 618, if you understand it that way. So that is one. Let's look at another example. This is another scenario whereby market created a down, an up, and a down. You guys, at this point, you know that when market creates down, base down, it creates a lower low here. Okay, market creates a lower low. The next thing for you to do is to look for a buy, because at the end of the day, you expect market to go up after it has created a lower low. So now that we are looking for a buy, the next thing that we want to look at is our zone. Do we have a zone there? Do we have a confluence that is psychological figures? Let's see whether we have some confluence, which is psychological figure. Now, what will help you is, for me, I normally draw my figures, okay, the psychological figures. I normally draw the lines there so that market comes to those levels, I easily spot them. Now, when we trace this thing back, let's see whether there is a zone. There is a zone. Yes, there is a zone here, right here. We have this move all the way to this move. That is a demand zone. That is a demand zone, trust me. So let's just extend the line to our right. Yes. So we can clearly see that there is a demand zone, there is a psychological figure. If you can get a trend line all the way, maybe it will be big, but let's see whether we have. Yes, even on the daily, we can clearly see this level is a strong level, strong level. It tells you how strong this area is, and you don't need to joke with it. All right, I didn't get any trend line, so I only have the demand zone and the psychological figure. I still want to execute this trade, so I'll go down to the 15 minutes. Please, guys, the confirmation is very important. You can get all four, okay, you can get the other four, but if you miss the confirmation, it's better you don't even take the trade, because for me, the most important part of this strategy is getting the confirmation. All right, so if you don't get the confirmation, you don't take the trade. A lot of you, you are likely not getting better trades because you don't wait for confirmation. And it's not like it doesn't happen to me. It has happened to me several times, and that is why I am advising you not to repeat the same mistakes that I did. All right, so always wait for confirmation. When market came into the zone right here, it got rejected. So that was the first bounce. Then it came down again. What do we have? We have a double bottom right here. And after a double bottom, what do we look for? We look for a bullish candle to go up. Okay, so green candle, we look for green. like this with wick at the bottom, like this. Okay, so that is exactly what we have here. We have our double bottom and we have our pin bar formation. This is the pin bar candle, and it is time for us to execute the trade. So the trade will be here with our stop loss a little below the pin bar. Our take profits, you can use the zones, okay, zones on the chart, or you can also use FIP. Okay, this time we want to use the zone. So this level is where we take the trade. Now let's calculate the risk reward. It's very important. Risk reward is about 1:3.5. That is massive. So it means that for every $1 that you are risking, okay, you are aiming to get 3.5 times. Now what it also means is that if you are willing to lose $100, then you are going to make $350. That is the meaning of this. So let's take the last example on a different pair. Let's say GBPJPY, and then we call it a day. Okay, this time let's just do it on 15 minutes because I can easily identify this. So market creates a down, an up, and a down. So here we have what we call down base down, or market creates a lower low. So after a lower low, we expect market to come all the way back, okay, to create a lower high. And after it creates a lower high, this is a lower high, the next move is down, right? Yes. So let's just mark our zone. Let's use our FIP to see whether it will be in line with our zone, and bingo, the level, which is a 786, okay, is perfectly in line with our zone, which is right here. Now we can also see whether we will find some psychological figures and all those things, divergence, and guys, we will go through all of them, don't worry. Now for now, the idea is for you to know how you go about it, how you go about the strategy, all the way from getting the direction to execution and then exit. Now this is a continuation, and we can actually look for a pin bar, but the first candle that formed is not a pin bar, okay, it's just a regular candle with some rejections. And so we waited to see a double top. It didn't happen, but finally we had a break of structure. That is why all three confirmation patterns are very, very important. Okay, a break of structure because we had markets come to this level, went down and started pushing up, so it formed a structure level right here, and this very candle here broke that structure. So right here is our execution candle. We put our sell risk reward 2 here, then we just adjust our stop loss a little above the execution candle, and our take profits will be down. Okay, we can use the FIP levels. For take profits, you can use FIP levels, you can use zones, you can use liquidity levels, and a whole lot. Okay, people have ways of taking their profits. Some people even have a fixed target. Maybe they target 50 pips, 30 pips, 20 pips. I mean, that is how some people trade. But like I always say, you are actually going to find who you truly are and what you want to do, because we are going to post a lot of videos educating you on the various styles of trading. So yes, on GBP/JPY we have this. Let's put the stop loss again. Yeah, and then our take profits right here, and this gave us 1:4, massive, right? Massive 1:4, meaning if you are risking $1,000, you are aiming to make $4,000. All right. So yes, guys, this is where we end. This is where we end. I believe that when you put in the work, everything will be fine. as an investor, you need to know that you have to put an uncomfortable amount of time and investment in yourself in order to get the freedom, okay, and the easy life that you desire. And I also know there are some of you here who have been trading for some time, but it's not really going well as expected. I must tell you that you are not alone. It happens to almost all of us, all right? So I'll just encourage you to keep pushing, keep doing what you are doing, okay? You have to keep sacrificing, all right? The late nights, sacrificing the weekends. You need to do early morning, wake up early in the morning, do your stuff, okay? I know you will be rejected, you will be frustrated, you will be misunderstood, and all those negative emotions. Sometimes you go through a lot of anxiety and tears sometimes, guys. Yes, it happens to almost all of us. That is how the journey is. And that is why we all need to come together and then try to help each other. Learn from people. On YouTube, there are a lot of other guys who are posting valuable content that you can learn from. You don't need to compete with them. Just learn from them. Level up, all right? Level up, and I believe we are all going to do well. This information is for free. I'm not selling anything. From the disclaimer, you guys can see that I don't sell anything unless people who actually want one-on-one training with me. Like, that requires my time, so I charge for that. All right. If not, I'm going to post everything for free here so that you guys can also learn from what I know about this market. I've been in it for some time, okay, for a long time, about 6 years now. All right. And I think that I can help you guys to get to where you want to be. So you guys, please chase your dreams, okay? Take risk, all right?
Do it!
Take risk, because at the end of the day, life is not about survival. Life is about taking big risk, all right? Taking big risk and leaving footprints for many generations to come. Take big risk, leave footprints for many generations to come. Because at the end of the day, even if you fail massively or succeed, you will still leave a mark for people to learn from. Okay, so yes, you have to know that every legend wants to the risk to fail. Every legend wants to the risk to fail. So at the end of the day, you either die as a legend or you succeed as a legend. Thank you guys for watching. Always remember, success is what happens after you survive all the disappointments, because as traders we go through a lot of stuff. Like, I can't even tell. People are going through a lot, guys. I believe we are all going to do well if we put in the work. It is gonna happen. So please, guys, subscribe to the channel. Please help us grow, right? Subscribe to the channel, click on the post notifications so that whenever we post a new video, you'll be notified. And also like the video, okay? Like, so that YouTube will recommend our video to many other people so that they can also benefit. Thank you very much. I'll see you in the next one. Oh, okay, guys, before I go,
to get underwear may affect men's fertility. My bro.
I will leave a link in the description. When you click on it, it takes you to this page, okay, where you can join our Telegram community. We also have recommended brokers. This is a Telegram community. We have we also have our social media platforms. This is a Telegram. Currently, we have a little over 300 people. So please join so that we can grow the community. Also, the recommended brokers, we have already done our due diligence on all of them. I've used most of them for over 5 years now. So Hot Forex, XNES, XM Global, all these brokers, I've used them before. And Binance, obviously, you know that. So these are very, very good brokers that, in fact, you can sign up with and trade if you don't have a broker yet. Okay, or if your broker is giving you problems, then I've got your back. Okay, sign up with our link let's grow together. Thank you, guys. I'll see you in the next one.
Bye. Have a great time.